Gold is on a wild ride. Just this week, gold prices hit a one-week low. This comes after hitting record highs just days before. Gold has been setting new records throughout 2025. It seems like every time we turn around, gold is more expensive than ever. So what's driving these price swings? There are a few key factors at play. Trade wars, global uncertainty, and even the actions of the Federal Reserve are all impacting the price of gold. Let's break it down. First, we have the ongoing trade war. President Trump's tariffs are creating uncertainty in the market. When investors get nervous, they often turn to gold as a safe haven. This is a classic pattern we've seen play out time and time again. Second, we have geopolitical tensions. The ceasefire between Israel and Hamas is fragile. The war in Ukraine drags on. These events add to the sense of uncertainty in the world. Investors flock to gold's stability during these turbulent times. Finally, we have the Federal Reserve. The Fed has been raising interest rates. This makes it more expensive to borrow money. Higher interest rates can slow down inflation. The Fed is walking a tightrope. It wants to control inflation without sparking a recession. All of these factors are combining to create a volatile environment for gold. President Trump's trade war is a major factor driving the price of gold. The president has slapped tariffs on goods from China, Mexico, and Canada. These tariffs are essentially taxes on imported goods. This makes those goods more expensive for American consumers. The tariffs have disrupted global trade. Businesses are unsure about the future. This uncertainty makes investors nervous. When investors get nervous, they turn to gold. Gold is seen as a safe haven asset. It tends to hold its value during times of economic turmoil. The trade war has created the perfect storm for gold prices to rise. The tariffs have increased uncertainty and volatility. This makes gold more attractive to investors. As the trade war continues, it is likely that we will see continued upward pressure on gold prices. It's not just the trade war that has investors on edge. The world is a volatile place right now. Geopolitical tensions are rising. The conflict between Israel and Hamas is a major concern. The ceasefire is fragile. A renewed outbreak of violence could send shockwaves through the global economy. The war in Ukraine is another source of uncertainty. The conflict has already had a significant impact on the global economy. It is unclear how or when the war will end. These geopolitical tensions are driving investors towards safe haven assets like gold. Investors are looking for assets that will hold their value during times of turmoil. Gold has a long history of being a safe haven asset. It is a physical asset that is not subject to the whims of governments or central banks. This makes it an attractive investment during times of geopolitical uncertainty. The Federal Reserve is also playing a role in the gold market. The Fed has been raising interest rates. This is an attempt to control inflation. Inflation has been running hot in recent months. The Fed is trying to get it under control without causing a recession. The Fed's actions are having a significant impact on the gold market. Higher interest rates make it more expensive to borrow money. This can slow down economic growth. When economic growth slows, investors often turn to gold as a safe haven. The Fed is in a tough spot. It needs to control inflation, but it doesn't want to tank the economy. The Fed's actions will continue to have a major impact on the gold market. Analysts are divided on where gold prices will go from here. Some believe that gold will continue to rise as long as the trade war and geopolitical tensions persist. Others believe that the Fed's interest rate hikes will eventually put a damper on gold prices. Only time will tell what the future holds for gold.